Guest sees yet more upside for the chip maker as artificial intelligence models get increasingly complex. And of course, all this computing demands more and more power, which means that operators of data centers, for example, need ever more efficient chips. David Nelson joins us now, Chief Strategist at Belpointe Asset Management. It's great to see you. In a way, this reminds me of, at the beginning of a roller coaster, it goes up and up. You're getting more and more scared, but it keeps going up.
I hear what you're saying, and you had a great lead in because you hit on some of the important points. Currently, the moat for Nvidia is quite large, and you don't often see a revenue beat of 22%, wow, with a lot of growth still left on the table. But it also screams that, this AI is just really screaming for some kind of competition out there. You can bet every company on the planet that manufactures silicon is attempting to move into this space in some capacity. But right now, the lead for Nvidia is theirs to lose.
Yeah. At what point, though, do you jump off? Yeah, I guess my roller coaster analogy is not working very well there, but why? That's the question, isn't it? Because it can't go up forever.
Well, I mean, some companies have. Look at where Apple was, 15, 20 years ago. Okay. It can go. So the competition will move in, and I guess it'll be on the multiple. But even when you look at these numbers and you look at all this growth, the company right now on new estimates, a company that, by the way, even next year will grow another 40, 50%. It's trading about 31 times next year's earnings. Apple trades at 27 times and has less than 8% growth is what they're looking at. So is Nvidia too expensive? I'm not sure.
Fascinating story. David, I know I'm beating this drum, but is there any question of a bubble here?
I think the real story for AI is less about the Nvidias of the world. They're obviously very important, but virtually every company on the planet is going to be using AI in some capacity. If you're a CEO and you haven't embraced this technology and found a way to build it into your business model, you're a dinosaur. Because the board of directors is going to find somebody that gets that message. It's probably the single biggest thing that's going to drive markets over the next 5 to 10 years.
Wow, 5 to 10 years. Yeah, I've seen at least 2 analysts saying the entire computer industry is changing in front of our very eyes.
It is. I would agree with that.
Talk to us about Jackson Hole. Latest I heard, Jay Powell, the Fed boss, was supposed to speak tomorrow. What signals are you looking for from him?
I don't think we're going to see anything dramatic. I think this speech will be actually a lot less dramatic than the one this time last year. He's going to have a strong message that the job isn't finished. From my perspective, as a strategist, I think all they need to do is stand pat. But I think the members of the Fed are so desperate to undo some of the mistakes of the past and the rhetoric of the past that they'll likely go too far. There are a lot of people out there that would like to give Jay and this Fed a medal, thinking that they're going to engineer a soft landing. I'm not in that camp. I don't give the medal to the guy who starts the fire and then arrives with a fire truck to put it out.
What about commercial real estate? What is your feeling? Is there lots of pain ahead for banks, for example, with these empty office blocks?
I think it's even spreading to other areas like multifamily as well, which was previously untouchable. Right now, what I'm seeing, you got a lot of construction loans. When you start these projects, they start to roll over. You go to a longer-term loan. Now the loans are twice as expensive. The value of the properties are less. The loan-to-value metrics are not good. I think you're going to see some of these entities, some of these real estate companies actually hand the keys back to the banks. And then what are the banks going to do with that property? Oh,
that's interesting. Yeah, not just office blocks. Uber, tell us what your thesis is on Uber, please.
Uber's an interesting one. It's one of those unicorns that actually went profitable. They all haven't done that. The top line growth right now is tracking in the high teens. Earnings are now growing fast enough to cut the valuation in half by next year. So it's a name that we own. I'm actually going to use the product tomorrow morning. I'm going to go to the airport, like a lot of people do. Why drive my car? What I'm going to pay in parking would pay for my ride. I can ride in style. So I think that's what people understand about this company. biggest risk for this company is regulatory, what cities and the federal government might do to their business model.